Note to learner: this video provides content that will be hosted on the Ginnie Mae LMS in the near future. In this video, you will not be able to interact with screen content to include selecting pop-ups, launching resource hyperlinks, and answering knowledge check questions. Nonetheless, you will be presented with all of the content presented in the interactive e-learning training. Though the audio narration may request that you select items or buttons on the screen, please pause the video to read the content and then select play to continue with the video. When the video advances to a knowledge check, please pause the video and try to answer the question in your head. Select play to see the correct answer or answers to the question. Welcome to the overview of the Ginnie Mae Guaranty Agreement key components. The purpose of this training is to present the Government National Mortgage Association, Ginnie Mae Guaranty, its benefits, how it is protected and the risk management approach, and what constitutes non-compliance with the Guaranty Agreement. Select objectives to learn what you will be able to do by the end of this module. Select Next to continue when you are ready. Ginnie Mae is the only federal agency tasked with the administration and oversight of an explicit, paid-for, full faith and credit guarantee on mortgage-backed securities, MBS. Even in difficult times, an investment in Ginnie Mae MBS has proven to be one of the safest an investor can make, as evidenced by the demand for these securities from investors worldwide. With a guarantee for the timely receipt of principal and interest, P&I, MBS can be attractive investments for investors worldwide. Ginnie Mae's guarantee, which is applicable with respect to all Ginnie Mae MBS and home equity conversion mortgage-backed securities, HMBS, is included in the terms of each uncertificated Ginnie Mae MBS and appears on the face of each certificated Ginnie Mae MBS. The Ginnie Mae guarantee ensures that the security holder receives the timely payment of scheduled monthly principal and any unscheduled recoveries of principal on the underlying mortgages, plus interest at the rate provided for in the securities. If a borrower fails to make a timely payment on a mortgage, the issuer must use its own funds to ensure that the security holders receive timely payment. If an issuer fails to ensure that the funds necessary to make timely payment are available or otherwise defaults in the discharge of its responsibilities, Ginnie Mae, in accordance with its guarantee, will make payments to security holders. Note: loans eligible for Ginnie Mae MBS are insured or guaranteed by FHA, VA, USDA's Rural Housing Service, RHS, and HUD's Office of Public and Indian Housing, PIH, which set credit underwriting and servicing requirements. Select Guarantee to view the Ginnie Mae Guarantee. Select Next to continue when you are ready. The Ginnie Mae Guarantee states that an issuer can obtain from Ginnie Mae, for a specific MBS, a guarantee that the investor will receive the timely payments of all P&I due on the security, regardless of whether the borrower, lender, or servicer are able to make monthly payments. The guarantee ensures the following benefits, including the full faith and credit backing of the United States, and attracts domestic and global capital to the nation's housing finance markets. The guarantee lowers the costs of mortgage funding and passes along the savings to support housing and home ownership in American communities. It allows mortgage lenders to obtain a better price for their mortgage loans in the secondary mortgage market. Additionally, proceeds can be used by lenders to make new mortgage loans available, thereby increasing the availability of funds for mortgages. Without this liquidity, lenders would be forced to keep loans in their own portfolio, greatly reducing the number of new loans they could make. Finally, the guarantee improves the ability to trade mortgages in the secondary capital markets. Select Next to continue. Now, check your understanding. Turn your attention now to how Ginnie Mae's guarantee is supported by its risk distribution model on defaulted issuer portfolios. Ginnie Mae's federal government guarantee is supported by a structural protection and attention to risk management that minimizes the extent to which the guarantee is acted upon. To accomplish this, Ginnie Mae subscribes to a risk distribution model on defaulted issuer portfolios. This business model puts Ginnie Mae in a fourth loss position as a federal backstop, behind three other layers of capital, thereby minimizing direct government exposure to financial risk from the MBS guarantee and coming into play only if the private sector issuer failed. The loss positions include homeowners' equity, capital of Ginnie Mae credit enhancers, FHA, PIH, VA, USDA, and balance sheet of Ginnie Mae issuers, who are responsible for on-time remittance of P&I if borrowers don't make mortgage payments on time. If an issuer fails, Ginnie Mae steps in to cover payments to investors. Ginnie Mae has consistently upheld the guarantee at all times, and investors have always received scheduled monthly payments of interest and principal without fail since program inception. The model effectively minimizes risk to the government and taxpayers because revenues have always been more than enough to pay for losses. Ginnie Mae has retained its standing as a profitable, self-sustaining government corporation. It maintains reliable operations and invests in modernization and improvement. We are always working to enhance program offerings and ensuring that our securitization platform allows for timely pooling without delay. Overall, Ginnie Mae's risk distribution model is designed to minimize risk to taxpayers. Select how risk is minimized to learn more. Select Next to continue when you are ready. Now, try this knowledge check. Ginnie Mae requires issuers to execute a guarantee agreement upon pooling and securitization in exchange for the government's full faith and credit guarantee on all MBS issued. All updates to the guarantee are proactively attached not only to new MBS, but to the entire MBS outstanding with each issuer. Under the agreement, issuers transfer all rights, titles, and interests in the underlying mortgages to Ginnie Mae. Ginnie Mae provides the framework and infrastructure needed by approved entities, issuers, to pool loans and loan packages as collateral for an MBS that will carry the Ginnie Mae guarantee. Issuers obtain the right to issue MBS carrying Ginnie Mae's guarantee by entering into a guarantee agreement with Ginnie Mae. The guarantee requires issuers to pay a monthly guarantee fee and abide by a set of requirements detailed in the MBS guide. Select Next to continue. The Ginnie Mae Guaranty Agreement lists the following 11 egregious program violations that are examples of non-compliance events. 1. Failure by a Ginnie Mae 1 MBS issuer to remit timely P&I payment to security holders. 2. Failure by a Ginnie Mae 2 MBS issuer to have funds in the central P&I custodial account at the time and in the amount required. 3. Notice by the issuer to Ginnie Mae for an advance of funds. 4. Any other act or omission by the issuer that results in an untimely payment. 5. Any notification to Ginnie Mae by the issuer that it cannot meet its payment obligation. 6. Any impending or actual insolvency of the issuer. 7. Any change in an issuer's business status that may result in an inability to carry out its obligations. 8. Any unauthorized use of custodial funds. 9. Any withdrawal and/or suspension of FHA mortgagee status or Fannie Mae Freddie Mac seller servicer status. 10. Any submission of false reports, statements, or data, or any act of dishonesty or breach of fiduciary duty to Ginnie Mae. 11. Any failure of the issuer to observe or comply with any of the terms and provisions of the Guarantee Agreement or the MBS Guide. Select Next to continue. Now, check your understanding. The goal of this training module was to provide you with an understanding of the Ginnie Mae Guarantee. You learned that Ginnie Mae's guarantee ensures that the security holder receives the timely payment of scheduled monthly principal and any unscheduled recoveries of principal on the underlying mortgages, plus interest at the rate provided for in the securities. This guarantee for the timely receipt of P&I means that MBS can be attractive investments for investors worldwide because it has the full faith and credit backing of the United States. You then explored the benefits of the guarantee as well as Ginnie Mae's risk distribution model on defaulted issuer portfolios. You learned that this business model provides a structural protection and risk management approach to minimize the extent to which the guarantee is acted upon. Finally, you examined events that constitute non-compliance with the guarantee. Select benefits to recall the variety of benefits a Ginnie Mae guarantee provides. Select non-compliance events to review the 11 types of events that constitute non-compliance. Select objectives for a review of what you should now be able to do. You may use the exit button to leave this presentation at this time.